Hey investors, this is Hilson here. This week in our stock spotlight, we're going to be featuring a Canadian company called Canada Goose. Canada Goose is a luxurious, iconic Canadian clothing store in Canada, and it's most famous for making extremely high quality and luxurious winter jackets. That's their main feature. And the quality it's made from is using animal fur such as coyotes and geeses, especially the stuffing or the fur that's part of the hood and also on the inside of the jackets. This company actually started off in Toronto and has expanded itself internationally to America and Asia, like China and Japan, throughout the past 10 years, and now has become one of the most iconic brand representing Canada. As always, I want to go over a stock's company's management levels, income statement, balance sheet, as well as its short-term and long-term potential, and grading it from 1 star to 5 star. We're going to start off with the management in knowing about the president and CEO of Canada Goose, called Danny Reese. A very respectable president that's been with the company for about 20 years before. He got this position passed down from the original founder of Canada Goose, which is his grandfather. And he's been with this company for about 20 years, knowing very well the operations and system of Canada Goose itself. And over the years, he's really transformed the company to becoming a very trendy clothing brand, despite so much big changes in fashion. So that's something very important to know about his ability to adapt his product and transform his product to something that's still popular to this day. What's also important is that he isn't involved in any scandals at all. That's a very good sign of a trustworthy CEO, as well as there's been not that much negative management issues with Canada Goose ever. So it's been a very well managed company since his takeover. And with that, it's also important to pay attention to how well Canada Goose is managing this coronavirus situation. And what the management has decided to do is that they are stopping retail stores in North America, but still opening them in China. That's where one of their main international businesses is at. But besides opening the store in China, they're also giving the health industry a big boost in producing healthcare gowns to really support the doctors and nurses in their fight towards coronavirus. This is really good on Canada Goose's image because they specialize in clothing and their ability to donate so much equipment to them. Since right now there's a lack of resource and supply for it, their efforts will be recognized, and it is important that they continue to do this to really continue on their strong image, which gives them a final grade of 4 out of 5 for management, just because of the positive management levels that's really happened throughout Danny Reese's tenure. And in the future, I expect more of these news to happen where he's going to continue on to adapt his product, to continue to reinvent it as well, in making Canada Goose still a very popular and iconic choice for Canadian clothes. Looking at Canada Goose's income statement, it is a very impressive one because of its big amount of revenue growth throughout the past few years. You look at 2017, $400,000, and in 2019, which is last year, it has doubled to $830,000. That shows very good confidence in this company expanding itself and still giving out and still being a great demand for consumers. Now, besides their strong revenue growth, I also like to look at their net income, and this is basically their revenue minus their expenses. They've done a fantastic job in keeping their expenses as low as possible, in keeping most of that profit. You look at here in 2017, 21,000, and now look at and now in the past year, 143,000. That's almost like a 10 times net income profit that they're able to manage. So they figured out a great way of minimizing their expenses while still producing high quality and earning lots of good revenue on each product. Now, this year is going to be very different because of the coronavirus situation. So much unpredictability for the earnings per share, the revenue, as well as the expenses. If they are still able to consistently produce still a good amount of net income, definitely not back to last year's level because that was an all-time high, but maybe still around where the 2018 levels are, then I still say this year is still a really successful year and they have rebounded really, really well. In the end, I'm going to give this income statement 4-star out of 5 just because of its amazing historic growth and ability to manage expenses, which very few retail companies can do. Looking now at Canada Goose's balance sheet, we first look at the cash. Their ability to raise cash throughout the years has been very strong as well, from 9,000 all the way to 88,000 last year. Right there, it's always great to have cash just in case you want to have any flexible plans or spendings that you want to do. In cash, you can always use it to pay off debt. Now, looking at the total current assets, it's also risen as well, almost double from 160,000 to 400,000 past few years, and that's really correlated with their big revenue growth and the expansion of the company throughout the past few years. Now, let's look at their total current liabilities, which is also their debt. They don't have much, about $136,000. They could use some of their cash right here to pay off most of their current liabilities. I would like to see if they can raise more cash and just paying it off just by that. But as of now, it feels like that most of their assets are actually from the inventory, maybe from their products and other things. So this is still good. Their current assets to liability ratio is about 4-1 right here, 400,000 to 136,000, which is a good number to look at. You don't want too much debt and you have a good amount of assets, but I want them to really raise more money. That's what it is. Now, by looking at their long-term assets and long-term liabilities, it's also 2-1 with 725,000 all the way to 326,000 right here. Anytime you have a balance sheet where you have 2-1 debt to liability, asset to liability ratio, it's always one that's worth considering in looking at and investing, knowing that they're not going to go bankrupt. They are in a good financial position. Although this is not the best one so far, they could do much better. But knowing that this is still a really relatively influencing company and that the abilities to raise money is not too difficult, suggests that this is a really safe investment to be in. And with that, I'm giving this balance sheet a 3-star out of 5. Canada Goose stock is trading at $31 today. I gotta personally say, short-term potential, this stock isn't looking the worst, but not looking great. So there's kind of a mix of light and darkness in there, whereas it's not the best or not the worst, so kind of average. Canada Goose is a company that really relies on its sales, mostly in the winter and fall time, so around September all the way till winter time. So right now shutting down isn't the worst timing. Still, 75% to 80% of their revenue growth does come from North America, and having that economy shutting down really hurts the revenue growth. But they're still able to have the international store, like in China, still open for some revenue. And it might really take a while for this company to really bounce back to its peak customer and demand levels. But this is a really strong growth company in my eyes. And as you can see here, in the past 6 months, it's really dropped from $50 to to the lowest, $22, and now it's rebounded to $30. So about 50 to 60% drop, which puts this company at a very undervalued situation. Now, the earnings and the revenue are really unpredicted, but right now, compared to before, this market cap of $3.4 billion, it's worth investing in today. I would personally buy more shares once it reaches around the $25 range again. And this is a stock that can rebound, I believe, back to its $50 range in the next few years. It is going to take a while for customers to really come back and buying luxurious clothes again, but it will happen. There's always a demand for jackets, especially winter jackets. Giving a grade of 3 star out of 5 for short-term potential. The biggest question regarding Canada Goose is, will it fly high once again? The answer is yes, but it won't fly high once again back to the $90 level, because in 2018 wintertime, that's when the demand was at an all-time high, and Canada Goose started off in 2017 listing on the New York Stock Exchange market and also the Toronto market as a very underrated and underappreciated brand that not a lot of people know about. Analysts paid attention, weren't really paying attention to it, and every quarter they were beating expectations and capturing their attention. That's what really increased their market cap to 3 times to that $90 level right there. Now, over the past few years, consumers and analysts know about Canada Goose, know about its revenue growth. So it won't really reach $90 again unless something revolutionary happens. But it does have potential, actually very likely potential, to reach back to double its growth, around $60, because of its unique product. Yes, it makes winter jackets, but it makes very high quality jackets representing a country in itself. It's a very iconic brand for Canada, and as Canada, we are a very influential and multicultural company that can influence a lot of customers. Yes. So in the end, I'm going to give this long-term potential a 4 star out of 5. It's still a really good company to invest in for its long-term growth. And I like to see how well management can handle this coronavirus situation, especially in its upcoming year. What does it do to reinvent its product, its marketing strategy? That's what I'm going to be really paying attention to. And thank you all for watching. I hope you've really enjoyed this video and learned something from this. If you are a stock investor, the best time is to get started now. And if you are considering other stocks to buy, you can check out some of my other stock videos. And until next time, see you all.